All right, what's up, everybody? Welcome back to the channel. We got non-farm pay. Oh, sorry, FOMC. This is Wednesday, not Friday. FOMC coming up. Got a few things to talk about. We had a little mishap on the week's exchange today. I don't know if you're trading on the week's exchange, but if you were and you were long Bitcoin earlier, you had absolute issues about getting out. Thank you, my love. Apparently they got that worked out. I ended up closing all positions trying to get out of a Bitcoin long this morning, and now I have 0 positions on. The account's up nicely, so the long that was being experienced on Bitcoin was obviously not actually being experienced, so my assumption is that they closed all positions before they shut down the order book. Once they shut down the order book, it appeared as if though we were stuck in a losing trade, but that is not the case. As like I said, my account is up nicely. I was in a short on Zcash. That trade was taken early this morning. And let me get over to the Zcash chart. As you can see here, it has essentially puked. That trade is done and over with. And then obviously the silver short that I've been riding for, at this point, weeks, has been closed out as well. That kind of sucks because I had a target of 71.70 on that short, but it is what it is. I got freaked out. I tried to execute all orders on the platform, and obviously the Bitcoin trade was already closed out, and I didn't know that. I haven't talked to anyone. They haven't confirmed this knowledge. If you suffered a loss, you can maybe reach out to Weeks and see what they'll do for you. Like I said, nobody has. I've been reaching out to them for a while, and I haven't received any updates or anything. Just simply, I left the office, went to the living room, logged in on a laptop, and it still looked like I was in the losing trade. And then I refreshed it, and instantly I realized that now it's showing that I'm in a short trade making money. So I closed it. It closed successfully, and I had no open orders left. Everything worked out just fine. So yeah, nothing major. Only you couldn't get out of a trade. That's pretty major. So I don't like when that happens. I do not like that at all. We got the news coming up really, really quickly. Nothing is expected to happen. I just wanted to see real quick what BOC did. They did nothing. We've got Fed coming up now, FOMC, and then tonight, the BOJ. You got 2 minutes coming. They're anticipated to do nothing. I expect a whole lot of nothing. This is a quarterly rate decision, so you will get dot plots and all the good data that doesn't come with every FOMC announcement, but it's the Fed a press conference that will be the big event. But 2 minutes for us to get the news at least, and then we'll see what the markets do here. Hopefully everybody's account is okay and not too badly messed up. I don't know if that was tied to this extensive selling pressure that we've seen in Bitcoin this morning. It got down to the weekly low. It sat there for about 30 minutes and then just took off to the downside. The dollar did not show us any upside pressure while this secondary meltdown took place. I don't know if any other exchanges were experiencing outages or anything like that. I do know that this is a pretty nasty down day. We are on fresh weekly lows down here. That's not what I wanted to see happen this week. I wanted to see the bulls keep the pressure to the upside. It doesn't look that bad, but it doesn't look that good. We'll see what happens. A lot of data for the market to suss out this week. A lot of data for the market to suss out. You are in a bear flag still here, so that kind of does suck. You're still above the daily 21 exponential moving average. You're still above the month of March's volume weighted average price. So have you done anything really to this structure? No, it's a very small pullback. You're still bearish on the year. The bears are still in control of price. The breakouts are struggling at best. So we'll see what happens. A lot of people are expecting more downside on Bitcoin, and you're under the yearly opening range. So it makes sense to be looking for that bearish trade. But if you're a long-term investor, this is also prices where you should definitely be interested in buying. I am adding to a cold storage portfolio right now as we speak. Have been since we capitulated. I don't know that that low will be the cycle low, but it was definitely a capitulation low. And generally, once that happens, it's going to take several weeks before you take that low out. And price has been pretty consistent, staying, in a range off the lows. So we'll see if support can come in here as the Fed pivoting or, staying neutral here could be construed as both bearish and bullish for the dollar. We did get some news earlier today, and that news was a bombing of a fuel depot in Iran, and that seemed to be what's caused oil to spike. And once oil started to spike this morning, that's essentially when we saw Bitcoin start to sell off. So yeah, as you can see, oil has since pulled back a little bit here since that news broke us out this morning. Right here is when that news happened, and then oil did get that upside move. We were looking for it to trade up into this region, but I did not take a short on it. I was still a little gun shy from that experience this morning. But when I can't get in and out of trades quickly, makes it a very difficult decision. So I just left it alone. Figured I'd wait until non-farm payroll hits. Oil's pulling back a little bit. We've got the news. Let's see what it says. And ba-da-doom. Nothing. Big fat nothing burger. But like I said, you're going to have the market chewing through all of the dot plot matrices and all of the data the Fed's going to read as soon as the press conference starts. When the press conference starts at 2:30, we will listen to what they have to say, and we'll see if the market fades this move or if they keep it going in the right direction, which for oil should be lower, for the dollar should be lower. Also took a short on Aussie dollar this morning. That trade worked out fine. All in all, decent day, except for getting stuck in that Bitcoin long for a little bit. We took the Bitcoin long. If you're wondering why we took the Bitcoin long, like what happened to get you in a long trade, we tested the weekly low right here. So once we put in this fresh weekly low, we thought we would try to fade that, expecting Bitcoin to stay in the weekly range. And as you can see, right in here is when all that controversy started. When we were trying to get out, we were not able to. And this was all during it wasn't a public live stream. It was a Discord live stream. But anyway, I'm sure other people witnessed it. If you were trading on weeks, you witnessed it. So a lot of people trade on weeks. We can come over here and you will see right here that I made a post on their thing, but got no response back. But here are other people complaining about, am I the only one experiencing this on my weeks account, not working smoothly? This is the first time ever that I have ever had any issue on this platform or exchange. And I've been trading on this platform / exchange for the last 2 years. The first time ever. So I'm not quite sure what went wrong. I guess we'll find out. But anyways, let's see what Mr. Stanley has to say here on the dot plot. Wait, sorry. Notification 3 seconds ago. Here's the dot plot. FOMC inflation expectations up, but so are growth expectations, albeit by a smaller margin. Still expecting inflation to soften through next year into 2028. There are your numbers. 2026, 2.4, 2027, 2.3, 2028, 2.1. Though inflation has been very sticky, no doubt. PCE projections 2.7, 2.2, and then 2.0. And then core PCE inflation 2.7. December projection 2.5. So kind of slow here. but ultimately down to their preferred 2% target. And the dollar seems to be taking it. Nvidia is still holding support here. I'm thinking Nvidia is going to break out. And we don't got a new 2-hour. We don't have a new 4-hour candle just yet. It's going to be a minute. An hour to be exact on the dollar's 4-hour time frames. Dollar is breaking out again or finding support, not breaking out yet. It's got to get above here to be breaking out, but I'm just generally looking at it as the near-term pullback trend. If you were to look at it similar like to that or whatever, you can see that it did spike this morning. So upside trend resumption looks to be the play for now. There's only 54 minutes left on this 4-hour range, which would be suggestive of an upside continuation move, as you're not taking out the previous candles open or low, which at that point in time was the low of day. So you set a fresh day low and faded back up into the range. So we took the trade on the Bitcoin to do what the dollar did. So obviously it was not a good trade. Not a good trade. Would have been a great trade if we would have done that on the dollar. But I mean, I kind of did do that on the dollar. Right here is the Aussie dollar short. It's a small account. Small public account. Real money though. So there's that. It's not a paper account. But yeah, we've been looking for Aussie dollar shorts pretty much all week. We just had to wait for it to get into the position for us to take the short. And that position was, of course, March's open. We wanted to see a rejection at March's open. We didn't. We did take the short on it yesterday, but during the live stream, the public live stream, I said if it makes a fresh day high, I will be stopped out. Early this morning is when it made the fresh day high right here. That's when that trade got stopped out. When I came to the office this morning, I seen that it had a pop back up into the March open, so that's when I executed the short position there. And then the news came out a little bit later, and then it had this significant drop here. I would be looking for downside continuation here unless today closes back to up on the day. If you get an upside close on Aussie dollar today, I would be worried about it moving higher. And in that scenario, I would anticipate gold and both silver finding support. This is a lower low on gold. It is the lower low that we were waiting on. You finally have it. Boom. So I don't know if you're going to see downside continuation or if buyers are going to look at this as an opportunistic area to be a buyer. You lost a $5,000 big figure number. The gold, silver both look like they want to pull back to lower prices. So I am going to be looking to put on another short, just not today. The reason I'm not looking to do that today is obviously because you're already down on the day. This is the trade that we would have wanted to take this morning if we were taking it this morning. So I don't really have any beautiful setups here for the FOMC. Maybe a long on Nvidia if it pulls back, gives us an entry opportunity. Maybe we'll get long down and around the weekly 21 if we can, as it has not been able to fail since we got short originally back here at the February open. Nvidia did pull back off of that level. It did look like we were going to get a downside break. Then it popped back up. We've closed 3 weeks below the 21 exponential. So at this point in time, if the bears had control of this, they would have probably already gotten a breakdown. This doesn't necessarily mean that the bears aren't in control of price. It just means you're not seeing any fear side selling pressure or any massive investors like bailing, jumping out of Nvidia stock. That is not happening here. You've gapped back up above the 21-week exponential, and it appears to be holding as support on an intraday time frame. You can see how the March VWAP, this blue line down here, has essentially been holding as support, support. Mark that confluence with the week 21 EMA. This is where last week closed. So before this week even opened, this was the price that I was going to keep on watch for this week. So you have two major confluence levels of support here, and that support is holding. Typically, when that starts to happen on a bullish, more bullish than bearish asset class, I typically want to look for the upside break. I do like it for the downside trade because it's bearish on the year. It's just not. If I had been holding this thing short for multiple weeks, I would be wanting to get out of it because it's an opportunistic cost. Like, the opportunity cost is too great to just set in a short on an asset that generally trends up, especially if it's not going lower. You're just setting in a lot of chop. You're paying fees on the shares that you're short, all that good stuff. Unless you're short on futures or something like a perpetual swap where you can hold the short and maybe get lucky and be on the right side of the trade where they pay the short, that would be different. But if you're not getting paid to hold the short, if you have to pay to hold it, it doesn't add up. It's not going lower. And I know there's always the yet portion of that statement. It's not going lower yet. But like I said, a short trade works out best when there's panic, fear, selling. That's when asset classes drop like shit's going out of control, right? When you don't have that aspect, the short isn't the best trade to hold. So we'll see what NVIDIA does here once we get the press conference. Basically, what we're going to be looking for in the press conference is tone. Do they have more of a hawkish tone, or do they have more of a dovish tone? Because they have failed to cut interest rates significantly since they started back in December of, 2024? They have not cut as much as they projected they would have cut by now. You can call that the market pricing out rate cuts. You can call it whatever you want. I would call it a Fed who has been very slow in the past, and that is why he is being fired. So yeah, we'll see what happens. But if he comes out with a hawkish tilt, that could put a little upside sting on the dollar. And if he comes out exceedingly dovish, which the dot plot doesn't look like that's going to be the case, then we would anticipate the current uptrend holding on DXY. DXY continues to move up. That could put sell side pressure on the old Bitcoin. So we'll see what happens. Good morning or good afternoon. Good afternoon. What's up, Janet? Grow Geek, J King, Tom. Hope everybody's doing okay. Hopefully nobody got wrecked on that inability to close out any long positions this morning, because Bitcoin was very weak this morning. Sorry, let me see something real quick. I'm trying to look at favorites, see if anything's moving really big. Lin up 52% on the day. So you do have some cryptos moving, which makes sense if dominance is down here. It is down, but just slightly. Dominance does look to be rolling over on the longer term time frame. As you can see here, I got the monthly pulled up. Get rid of these real quick and you can actually see what's playing out here on dominance. So if I had to make like one last stand for alts, it would be this. So your USDT, USDC, or stablecoin dominance is probably moving higher. So that should give alts the ability to move. If Bitcoin dominance does in fact break down and start trending lower, then maybe some of your favorite alts will start moving. Ethereum moved exactly like Bitcoin. Fartcoin got hammered this morning, put in a bearish engulfing, and is all the way back up here. So funny enough, there might be an opportunity here on Bitcoin as a long, or a short on Fartcoin if you anticipate lower prices. Your value area high on the daily range is 2166. That was a 30-minute bull trap before it rolled over. This aggressive pop here looks more like legitimate demand than it does a dead cat bounce. But it is an alt. With dominance being down, we can't put too much of a, you can't use it as too much of a sentiment gauge. As bonk still looks bad. Do that every time. Pingu still looks rough. So it's only Fartcoin that's essentially rejected the lows today. Yeah, this doesn't look so much like a shortable opportunity. 4-hour res is where I'd be putting that risk if I wanted to put a risk on for a downside short. If it could get up there and hold. I don't know that you're going to get that though. Yeah, that's a 2 o'clock candle. So off of the news, the FOMC, you're getting a bullish spike. So let's see what happens on the news. If he comes out and we get a move back up, maybe that gives us an opportunity to jump on a Fartcoin short. I don't know about that though, man. That's pretty brutal. Zcash also spiking on the lows. What a beautiful trending move that was on Zcash today. XMR was even better. XMR got all the way back down below the monthly VWAP. You can see right here is the monthly VWAP on Zcash. So XMR did actually have a better move lower. I don't know if it was a better move in terms of percentage gain. That's 4.75%. I doubt it. Yeah, no, Zcash was a far better move. So never mind, I shorted the right one. Thank goodness. I did want to leave it open though. Like I said, I didn't want to get out of it, but at that point I was willing to try anything just to get the Bitcoin trade to close. Count is up nicely though. Today's been a good day. It's been a good week. So I think I'll watch Fartcoin. It looks like to be the favorite for setting up, at least here, not for a long, I mean for a short. If you're looking for a long, you're going to be probably more focused on Bitcoin or something else that's still down pretty bad. I wouldn't love the idea of buying Bitcoin down here. There's no automatic level to just buy it off of, first and foremost. If you retrace this week's range with a fib, you would be under the 1 because you made fresh lows. It's a breakdown. You got more than downside continuation from that breakdown. So I'm not exactly sure what's going on. Four-hour support held. There's nothing on the 8-hour there. Yeah, 12-hour demand, right where Tom said this morning. Tom mentioned that 12-hour demand zone right there. That appears to be where it bounced from. The good eye, Tom. Doesn't look like it's a really good bounce. All right, let me get a link pulled up for the FOMC meeting. And hopefully my short is still ripping and didn't get kicked out. Yeah, I don't know how your position got affected if you were short Bitcoin this morning. I don't know if it even did get affected. I wouldn't be worried about it, obviously. I mean, I guess it would be worrying if you were in the money really good and didn't take profits, because at that point in time, you couldn't do anything. There was all kinds of wacky stuff going on. They were saying that I had like 3 to 5 open orders. It was weird. A lot of weird stuff happened. But yeah. So Farcoin is definitely going to be my favorite in terms of fresh shorts. If a short is given, I need to pull up the Fed. Oh, sorry. Let me do it this way. I'm looking for the actual. There we go. All right, perfect. All right, so we're good to go there. In 10 minutes, we'll go back over and see what's going on. They cut 50 before the election to help Kamala la 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 la. Maybe that was their plan. I doubt it. I mean, they were slated to start cutting. Yeah, it is what it is. Let's see something here. Oh yeah, it's fine. Never mind. Yeah, as long as you're trading under 2151, I like it lower. I don't like that it's retesting all the way back up here, obviously. Not after putting in a move like that, and not after being so freaking bullish. I definitely don't like that you're coming back up here, but if it gets faded, I can definitely be short here. We're pulling up Farcoin, and we're going to fire up a trade and see what happens. It's kind of scary, but yeah, kind of gun shy now, man. I don't like that at all. I like for my trades to be executed when I execute them. It is still very bullish. Let me mark off 8-hour res here just so I know what's going on. A 5-minute chart. Because this is your prior high. So above that, I don't have any interest in shorting it at all. Wow, a lot of people showed up and then a lot of people left. It's fine. Maybe we're not trading what they want to trade. Who knows? Nvidia pulling back a little bit. S&P back on the day lows. S&P still basically unchanged on the week, just hovering slightly above unchanged. The VIX did spike back up to 2351. It's trading inside yesterday's range. So we'll see here in a minute what the Fed has to say. But yeah, pretty volatile this morning. S&P had a nasty down move. Bitcoin had a nasty down move. Nvidia's just been very choppy, very sideways. Silver looks good. Under Monday's low is a bad look, but 6 hours until the close. Smoke the 3-day low and stay under the monthly way. Then I think the weekly demand zone is in play. Could be. It's hard to get bullish on Bitcoin right after you had a nasty down morning. And if it was at the weekly low or around the weekly low, I'd be all right with taking the long. It's just this far under it, I don't know where it's going. I would anticipate more downside. So instead of taking it on Bitcoin, I like Fartcoin better for the setup myself. I don't like the short day lows. And not on a day that's down 2.5%, almost 3%. I mean, Bitcoin doesn't offer that much volatility usually. Yeah, you're down over 3 on Bitcoin now. So the setup isn't to short Bitcoin. If you want to short a crypto, short one that is up. Doesn't mean you'll make money, but at least you have more of a potential downside move to get. But with the S&P and everything else trading on the lows coming into the presser, it kind of makes me a little bit suspect. We have 4-hour support at 181.99 on NVIDIA. Let me get that out there and see what happens with that. $182.01. Seems I'm the best bid at 182.01 on NVIDIA. Big spread on that. Almost $1. Here, I'm gonna move this over to another monitor so that way we can keep this up here. And then that means we can keep here it is FOMC and there is that. It won't let me pull up. There we go. Fartcoin, please. Yeah, I'm on. Yeah. They're getting ready to speak any minute now, so 2 minutes until the news conference starts. Crazy how it gets down here, sets this low, even starts to trend and then just bounces and comes all the way back to the POC. Very weird stuff. But like I said, if Bitcoin's going to roll over and put pressure on the rest of the crypto market, then obviously this one is best in line for that setup. Yeah. Obviously there's just everything else has already been hit pretty hard today. Fartcoin was getting hit hard too earlier this morning, but it actually did find support at 1050. I don't know what time we ended the stream this morning. I know we didn't have it on very long, but... Alright, it's 2:30. Still got nothing over there on the Fed screen. And it is... Is it live? Is it playing? No, it's not. That's why. Alright.
Pace.
How late am I? Just a few seconds.
While job gains have remained low, the unemployment rate has been little changed in recent months, and inflation remains somewhat elevated. Today, the FOMC decided to leave our policy rate unchanged. We see the current stance of monetary policy as appropriate to promote progress toward our maximum employment and 2% inflation goals. The implications of developments in the Middle East for the U.S. economy are uncertain. We will remain attentive to risks to both sides of our dual mandate. And I'll have more to say about monetary policy after briefly reviewing economic developments.
And so he's got slightly
Available
more of a
indicators suggest that
stance.
economic activity has been expanding at a solid pace. Consumer spending has been resilient, and business fixed investment has continued to expand. In contrast, activity in the housing sector has remained weak. In our summary of economic projections, the median participant projects that real GDP will rise 2.4% this year and 2.3% next year, somewhat stronger than projected in December. In the labor market, the unemployment rate was 4.4% in February and has changed little since late last summer. Job gains have remained low. A good part of the slowing in the pace of job growth over the past year reflects a decline in the growth of the labor force due to lower immigration and labor force participation, though labor demand has clearly softened as well. Other indicators, including job openings, layoffs, hiring, and nominal wage growth, generally show little change in recent months. In our SEP, the median projection of the unemployment rate is 4.4% at the end of this year and edges down thereafter. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.8% over the 12 months ending in February, and that excluding the volatile food and energy categories, core PCE prices rose 3.0%. These elevated readings largely reflect inflation in the goods sector, which has been boosted by the effects of tariffs. Near-term measures of inflation expectations have risen in recent weeks, likely reflecting the substantial rise in oil prices caused by the supply disruptions in the Middle East. Most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 2.7% and 2.2% next year, a bit higher than projected in December. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate.
If S&P rolls over and continues to trend under 6,663, then I will absolutely be more than okay with putting on the short here. This is 8-hour resistance. This is your prior 8-hour high. I'm more than okay with holding a short in this spread, but if prices break out above this and continue to trend, I am not looking for the short. But the reason I like this one best for the short is it's already shown the hand for weakness this morning. It has bounced back up higher than everything else, trading up into resistance, the current or even earlier point of control. This, for me, is the favorite crypto trade setup with everything that's going on right now.
At 3.5 to 3.75%. From last September through December, we lowered our policy rate 0.75 of a percentage point, bringing it within a range of plausible estimates of neutral. This normalization of our policy stance should continue to help stabilize the labor market while allowing inflation to resume its downward trend toward 2%. But the implications of events in the Middle East for the U.S. economy are uncertain. In the near term, higher energy prices will push up overall inflation, but it is too soon to know the scope and duration of the potential effects on the economy. We will continue to monitor the risks to both sides of our mandate. We are well positioned to determine the extent and timing of additional adjustments to our policy rate based on the incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path of the federal funds rate under what each participant judges to be the most likely scenario for the economy. The median participant projects that the appropriate level of the federal funds rate will be 3.4% at the end of this year and 3.1% at the end of next year, unchanged from December. As is always the case, these individual forecasts are subject to uncertainty, and they are not a committee plan or decision. Monetary policy is not on a preset course, and we'll make our decisions on a meeting-by-meeting basis.
Like always.
To conclude, the Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We at the Fed will continue to do our jobs with objectivity, integrity, and a deep commitment to serve the American people. Thank you, and I look forward to your questions.
Thank you. Colby Smith of the New York Times. There's been some debate about whether the Fed should look through the inflation that will come from higher oil prices stemming from the Middle East conflict. Is that the right approach at this juncture? And to what extent does the fact that inflation has been above target for roughly 5 years now influence the committee's thinking around this?
So, first, let me say we're well aware of...
It's been up higher than their 2% target. It has not been going up for 5 years. I mean, it's been consistently trending lower since the 9.2 spike back when Biden was in office. It has been going lower. It's staying off the lows. It's in a range.
The performance of inflation over the last few years and how a series of shocks have interrupted progress that we've made over time. And that happened most recently with tariffs, and
lies.
Now there will be some effects on inflation coming forward. The thing that's really important that we see this year
He's literally blaming Trump for his ability to be slow
on inflation,
on cutting interest rates,
through a reduction in goods inflation as the
I don't know that I would have cut him either.
Prices of tariffs go through the system, go through the economy. That's the main thing we're looking for going into this exercise. And we need to be seeing that to sort of understand that we actually are making progress, because on net we didn't make progress. And if you look at total core inflation, it's about 3%, and some big chunk of that, between 1/2 and 3/4, is actually tariffs. So we're looking for progress on that. The question of whether we look through the energy inflation doesn't really arise until we have kind of checked that box. It, of course, is kind of standard learning that you look through energy shocks, but that's always been dependent on inflation expectations.
To be fair, obviously, energy is what's causing the risk-off sentiment for the last few days. The oil spike is definitely what's causing everything, because basically, if oil is ripping, crypto falls. When oil is rolling over, crypto is doing good. Crypto is generally traded as risk on. So yeah, it is definitely that.
Expectations remaining well anchored, and I think now it's also dependent on what you mentioned, which is that broader context
dollar a little bit of
5 years now of inflation above target. We have to keep all of those things in mind, and the question of looking through when it does arise will be one to approach not lightly, but in the context that you mentioned.
And just on the SEP, can you help us make sense of why there is still a bias to cut for most officials this year, despite the upward revision to headline and core inflation and the essentially unchanged forecast for growth and unemployment? I'm just curious, kind of what's the genesis behind the need? What's the need for the cut?
Yeah, so there are 19 people, and so 19 reasons, 19 individual submissions. And if you notice, the median didn't change, but there was actually some movement toward a meaningful amount of movement.
Yeah, I'd be interested to see who wants the cuts. If it's Trump's man, that's going to be a good sign for future market prediction.
toward fewer cuts by people. So 4 or 5 people went from 2 to 1, let's say, 2 cuts to 1 cut. And each person has individual, stories behind what they want to do. But essentially it is that, the forecast is that we will be making progress on inflation. Not as much as we had hoped, but some progress on inflation. It should come as we start to see in the middle of the year progress on tariffs, going through once and then tariff inflation coming down. We should be seeing that. And, the rate forecast is conditional on the performance of the economy. So if we don't see that progress, then you won't see the rate cut.
No, I bet we do see rate cuts, pal, as soon as you're gone, buddy. I bet you we do. You're just being an asshole because you and Trump don't get
A little
along.
bit, and to be clear, is the higher inflation penciled in here for 2026?
I mean, we can look at
solely the
inflation. We can look
result
at
of
we can
the
look
oil
at both
shock or
PCE and
something
CPI
else?
when this is over.
So that's going to be part of it. But, that wouldn't be most of core, right? So the oil shock for sure shows up here. Some of that will be in core as well. But yes, but no, there's also
Every
just
$10 move on a barrel of oil will be a 0.2 point move in CPI, overall core. That's what he's talking about. Every $10 move is a 0.2 point move in inflation. So oil spiked up many $10 per barrel price. I mean, oil was trading up at $96. It was trading at, so yeah, there's going to be a spike on inflation for sure on CPI.
The feeling that we haven't seen, the progress that we had hoped for on core goods and on tariffs and on the rest of it. So for whatever reason, people did write up their inflation forecast. That will certainly be tied to events in the Middle East and
Bitcoin
the price of
holding
oil. But it's
steady
also,
at
I think, a reflection
71K,
of
71.6.
the slow
Bitcoin
progress
holding
we've
steady
seen
at
on tariffs, which we believe we
2112.
will see. It's just a question of how long it takes
S&P did
for
make
them to
fresh
get
day
all the way through
lows.
the economy. And it just takes some time.
Right. And is the lack of change in the SEPs, again, just to explicate this a little bit, more due to the expectation that the oil portion of this will
Gap
pass through?
fill on S&P would be
Or more out of concern that there
66.34.
is a potential blow to consumption and growth coming in the form of wealth effects with the stock market down, in the form of gas
Dollar's up
prices,
to $99.90.
diverting spending from other parts of the economy.
So if the dollar
So
keeps
I
pushing
didn't
higher, I
get
would
the second part of your-
anticipate Bitcoin
Well,
rolling,
the
but
consumers
you
gonna
never
be
know.
potentially diverting money to gasoline
Yeah.
from other parts of the economy. There could be a growth
On
shock.
the actual here, you can actually see that you're not seeing heavy sell pressure deltas. You're still seeing more bullish pressure on deltas in this near-term price right here. So we could absolutely see a spike above 2154. I don't want to see that, but we may see that. It is starting to look like it wants to hold the wad here for whatever reason, and dollar has spiked. So if we're going to see dollar strength put pressure on Fartcoin, maybe it wants to run these highs first and then roll. So you might want to keep that into your analysis as well.
Or a redistribution of spending there.
And then again, it might not want to go lower. It might want to go higher.
They can hit consumption, wealth effects as well. I guess I'm wondering, is the rate forecast not changing because you think the oil shock is going to be temporary, or because you want to be sure you're positioned in case growth starts to slow?
So the thing I really want to emphasize is that nobody knows. The economics effect could be bigger, they could be smaller, they could be much smaller or much bigger. We just don't know. So people are writing down something that seems to make sense to them, but have no conviction. To your point, if we have high, if we
Growth
have
is still
a long
consistently
period-
good. I don't understand what they're seeing to make them think that there's going to be some massive hit to growth. Growth is still consistently trending in a good direction.
of much higher gas prices, that's going to weigh on consumption. That'll weigh on disposable personal income, and it'll weigh on
Not GDP. GDP is highly influenced by government jobs. The Democrats have had the government shut down twice now. And this last time, it's been, like 40-something days. Obviously, that's going to have a massive impact on GDP numbers.
consumption, but we don't know if that's going to happen. Something quite different than that. We might have much lower than expected pass-through. So people write down, this is one of those SEPs where a number of people mentioned if we were ever going to skip an SEP, this would be a good one because we just don't know. So I wouldn't say there's a conviction that this is going to go through quickly or not quickly. It's just you got to write something down.
Dollar up at
and this
high
is
of
something
days.
that
I'm not
is,
sure what's
that people wrote down, and so we don't debate how long,
Not
how
sure
you
what's
do
going
that.
on
We
with
wouldn't be able to
portfolio.
debate what the length of or size of these effects would be. We just have to kind of make an individual statement. And you
Fresh
also,
day high on
what you've
dollar.
written down before you'll be reluctant to move too far away from that just because you don't know. It's so unclear what the direction from this particular end will be. Meanwhile, the growth has been solid, and inflation, the overshoot is mainly from the goods and tariffs. And, the labor market is, the unemployment rate, of course, is little changed since September. You have a very, very low break-even rate, apparently, for new jobs with little growth in either demand or supply. But
96.21
the
on
U.S.
oil.
economy is doing pretty well. It's just we don't know what the effects of this will be, and really no one does.
Steve.
Mr. Chair, in the past, the staff has suggested that higher oil prices, they have a hit to consumption, which Howard was talking about, but that's somewhat offset by increases to domestic production. I wonder if you could talk about that dynamic, especially to the extent that how much U.S. production is happening right now.
So the first thing is there is, the original thinking, the long-standing thinking, put it that way, is that you do look through energy shocks. But as I mentioned, that's conditioned on inflation expectations and that kind of thing. So, sorry, your question was?
What the staff is saying about, and has said in the past,
Yeah.
about
So there'd be an offset.
offsets, yeah.
So that's true. We have, we're a net exporter of energy, right? So any effects on employment and economic activity and spending would be offset to some extent by the fact that our oil companies will be more profitable and they may even do more drilling. If you ask oil companies about doing more drilling, though, they're going to want to see, a consistent rise in oil prices from where they were before the buildup for the war, and they're going to want to believe that that's going to be persistent for a fairly long
was
time.
trending
They're
higher
not sitting
before
there
the war.
waiting for oil to go over $70 a barrel, and then they're going to start drilling or whatever. They're going to make a reasoned, careful judgment
Can
that
they
we're going
make
to have
money
higher oil prices for an extended
if
period, but
they
meaningfully
drill?
higher. So I wouldn't say there's much of that happening. Not much of it happening now, but some of that could happen over time if you see that. But so the net of the oil shock will still be some downward pressure on spending and employment and upward pressure on inflation, of course.
And if I could just follow up on Colby's question, how much do you worry that having looked through tariff inflation and inflation running above target and looking through the oil price shock would undermine the credibility of your commitment to the 2% target?
We have to do our analysis and think these things through carefully, but of course that's on everyone's mind. We're well aware.
Dollar up at the
of the
$100
history
level. It's a big figure number.
But you don't want to overreact to that. You want to make the best judgment you can based on the facts. I don't think we're going to let it color our decision-making more than is appropriate. It's more the thought that it's been 5 years, and we've actually had, we had the tariff shock, we had the pandemic, and now we have an energy shock of some size and duration. We don't know what that's going to be, actually. And, it's one of those things where it's a repeated set of things, and you worry that that's the kind of thing that can cause trouble for inflation expectations, and so we worry a lot about that, and we are very strongly committed to doing what it takes to keep inflation expectations anchored at 2%, and I think it's important that we do that. Very important.
Nick.
Nick Timmeros, The Wall Street Journal. Chair Powell, you've described monetary policy as modestly restrictive. If the unemployment rate is roughly stable, inflation moving sideways in the high twos, with an ongoing overshoot in services and non-housing services, not just goods, and the economy doing fairly well, as you just outlined, what gives you confidence that inflation returns to target over the next couple of years?
Okay. So I would say the rate is, you can characterize it as in the high end of neutral, or you can characterize it as perhaps mildly restrictive, even modestly restrictive. No one knows for sure, but it's in that range where it's somewhere around the borderline between restrictive and not. Remember that a big part of the disinflation we're looking for is just the runoff of when tariffs are put into place. Of course, what they do is they raise prices to some extent, to the extent those prices are the tariffs are paid by consumers on a one-time basis. And we're waiting for that process. It takes 8, 9, 10, 11 months a year to go through the system, and we're waiting for the tariffs, which were put in place over the course of the middle part and later last year. We're waiting for that to go through the system, so that goods inflation will return closer to what it's always been. I mean, it used to be
behind
for
on
many,
this,
many
but
years
it's
it was
okay.
negative.
I don't really care what he
And
has to
then,
say. He's already
the
said
year
enough for
before
me.
tariffs came in, it was 0,
He's hawkish.
and it's running at like 2% now. So, and
Risk
so that's
markets
kind
are
of
making
goods
fresh
inflation is
lows,
running at
dollars
2%.
making
So
fresh
that's not
highs.
coming from standard
a
Phillips
bearish
curve restrictive
risk.
restrictive policy.
Positioning,
it's coming
but
from
there's just not-
the runoff of a one-time thing. We also think it's important, though, to keep policy either mildly restrictive or
Not much out there
close
in
to that,
terms
but
of a
not too
bearish
restrictive because of the
setup
weakness in
this late in the session other
downside
than
risk in the labor
Farcoin, and
market.
it's not really doing
We are balancing
anything
these
yet.
two goals in a situation where the risks to the labor market are to the downside, which would call for lower rates, and the risks to
My take
inflation to
profit
the
on
upside, which would
Farcoin
call
is
for higher rates or not cutting
0.1993.
anyway. So we're in a difficult situation, and we feel like our framework calls on us to balance the risks, and we feel like where we are now, which is kind of on that borderline, the higher borderline of restrictive versus not restrictive, we feel like that's the right place to be.
Can I ask about core non-housing services, though? Because there are some people who think that it hasn't come down very much, if at all, over the past year. If wage growth has come down, if the labor market has loosened, why has non-housing services inflation maybe been slower to follow?
That's a good question. It's frustrating. Non-housing services they basically moved sideways for a year. They're at the same level, and we do expect that they will come down. But it's a bunch of idiosyncratic things. But at the same time, that is one of the things we should be seeing, because to your point, the labor market is clearly not a source of inflationary pressures, and that should really matter for non-housing services. But we're not seeing progress there. So we do, what we expect for next year is what we want to see for this year, rather, is continued
This looks
progress on
super
housing
bullish
services.
here.
Finally seeing
It's
that
struggling to break
goods
down.
inflation come back down
I'd like
because
to
the
see
one-time
some
effects of
speed
tariffs
to
are
the
through, and then
downside.
also get some help from non-housing services. That's what we'd like to see. But it's
Just
it's
not
a good
getting
question
it
why
for
we
whatever
didn't see
reason.
much of that last year.
Edward.
Thanks, Chair Powell. Edward Lawrence with Fox Business. So
NVIDIA is
in
breaking
December,
down
we
under
saw
4-hour
employment numbers
support.
revised down to negative 17,000. January
risk
revised
markets
down.
making fresh
February posted a
lows,
loss of
dollar
92,000.
making fresh
Is
highs.
is the employment
It
side
doesn't
a far
look like
greater
NVIDIA is
risk
going to
than the
hold
inflation
support for
side? Because we
now.
are seeing inflation, CPI is close to 2%. PCE has ticked down.
Now I'd just
overall.
like to see Farcoin heading in
It's
that
really-
direction.
I wouldn't say that. I wouldn't say that that's clear at all, that one is more at risk than the other. So you can point to the unemployment rate being stable, and in a world where both supply and demand for workers have come down very, very sharply over the course of the past year due to immigration policy largely, a ratio is going to be a better thing to look at than job creation, for example. So, and the ratio is the unemployment rate, and it's been stable since September. So that tells you that. Inflation, you can. We're at 3.0% core. Inflation 2.8% headline. So we've been well above the 2%, that amount, whatever it is.
We do got a lower low now, at
0.7,
least.
0.8.
We've
We're a
got
full
that going
percentage point
for us
above
here,
2%
so
for some
that's
time.
a good look. A
And it's
30-minute
concern.
lower low,
We
but
need to
still
get
it is a
back down to
lower low.
2%. And we need
Lower
to keep
high,
focused
lower
on that,
low.
even though we do
Now we
now
wanna see
face
that trend
some
continue.
new inflation from energy. So I'd be hard-pressed to say that one of them is obviously more at
But
risk than the other.
I'm not loving
If I may,
the deltas.
what happens if there's no Federal Reserve chairman confirmed on May 15th? Would you stay on?
So if my successor is not confirmed by the end of my term as chair, I would serve as chair pro tem until he is confirmed. That is what the law calls for. That's what we've done on several occasions, including involving me, and it's what we're going to do in this situation. And while I'm at it, on the question whether I will leave while the investigation is ongoing, I have no intention of leaving the board until the investigation is well and truly over with transparency and finality. And I would refer you to the statement that was in the Fed's brief that you all have seen, and I won't have anything more for you on that. On the question of whether I will then continue to serve as a governor after my term ends and after the investigation is over, I have not made that decision yet, and I will make that decision based on what I think is best for the institution and for the people we serve. Figuring you probably were going to set the dominoes off there, Edward. And I'm not going to have any more to say on those issues, by the way.
It's not going to stop them from asking.
Thank you very much. Claire Jones from the Financial Times. People have drawn quite a few historical parallels with the current situation. We've seen oil price shocks in the past. Some people have said the first Gulf War and the Fed's response to that, where there was a focus on the growth risks, is the right parallel. To what extent would you agree with that, and to what extent do you think we're in a different place today? Thank you.
You know, it's really hard to say until we see the situation, the actual situation. In some circumstances, that might be the right case. In fact, for example, if we do see the kinds of disinflationary progress that we expect to see due to tariffs that I mentioned, I think it's hard to say, and it will depend to some extent on the size and duration of the effects we're seeing on prices, and it will depend a lot on what we can see in inflation expectations.
And just one follow-up.
Bitcoin headed back down towards the lows. It makes sense that it would. You've got the dollar moving higher.
Or from the comments you've made today,
Well, you
about
can't
the
see the
unemployment
dollar,
rate
but the
and
dollar's
focusing
moving
on that,
higher.
that
Risk
your
market's moving
view
lower.
on the labor market
Silver
story,
moving lower.
to
VIX
a large
moving
part being
higher.
the supply side
Bitcoin
story has
heading lower
changed.
to those lows.
Despite the quite negative number
Altcoin
in
pulling
February,
back a little
would that
bit
be
now here.
the right take, and was there anyone else in the
It's
room
looking
who
a little
thought
bit better.
differently, and that the
You're
February jobs
bouncing in the
report
4 hour.
was cause for concern?
So I think you have to take the two
Demand
together.
here.
You know, in a way, the January report
here.
was a positive.
Some people will look at that as a
surprise,
buying
and the February report
opportunity.
was a negative surprise.
But we have to
If you
contend
put them
with that.
together,
And as you can see, my
you
take
get
profit
something
is
in the
just
middle, and
shy
I think
of
you have to
this
really, as
candle's
you do,
open.
I'm sure realize there was a strike and there was weather,
If it
and
can
that's
come
about
down
80,000
there,
of the
I would be
negative
more than
effect
okay with
total
taking profits
on
there.
the February report. Notwithstanding that, so what do you see if you take a step back overall? There are a number of indicators that suggest a degree of stability, but the thing that I think
Because I'm a smooth
a number
operator.
of people on the committee are concerned about is just the very, very low level of job creation. If you adjust what has been the trend job
Bobby, could you
creation
grab
over
me
the
a bottle
past,
of
let's say,
water,
6
please?
months, if you adjust that for what
Thank
we
you.
think, our staff thinks, is the overstatement due to overcounting, effectively there's zero net job creation in the private sector. But actually, that looks like
guess I could get up
that's
and get it
about what the
myself. This
economy
guy's
needs
just
in terms
running his mouth.
of dealing with very, very low, non-existent really, growth in the labor force, which of course we've never had in our history. So you've got a sort of a zero employment growth equilibrium. Now that's balance, okay, but I would say it does have a feel of downside risk, and it's not kind of a really comfortable balance. So we look at that, we see it, we get it, and I mean everybody understands the arithmetic, and that's you can say the break even is zero, but nonetheless it's something we're watching carefully, and are concerned about. But ultimately, though, you can argue that it's a consequence of deliberate policy, which is really the changes to immigration. That's the biggest factor there. And
Bitcoin just shy of
but
making a
nonetheless,
fresh
something we watch
day
carefully.
low. That makes Bitcoin down damn near, just over 4%.
Thanks, Chair Powell. The
Leave it
economy's
to him.
experienced a series of supply shocks in the last few years, COVID, tariffs, 2 oil price shocks. Do you think
I
that is
mean,
bad
it
luck,
works
or
for
has
us,
something changed in the world that makes
Doesn't
supply
work
shocks
for
more
people holding
common? And does the
longs.
central bank need to start taking account of the risk of supply shocks as a more common problem?
We did go through a long period where the shocks were all demand shocks, and so we've had a lot of
Dollar
practice thinking about
stretching at
supply
this
shocks
point,
in
up
the last 4 or 5 years, for sure.
100.07,
And it's just a very different thing
100.07.
and a very much more difficult thing, because it does immediately raise the question of tension between the two parts of our mandate.
And just shy of
has the
taking
world
out
changed? I mean, COVID is a
Tuesday's
one-time
high.
thing, right?
Which would
this
be a
energy
bullish engulfing
supply shock
candle
is a
on the dollar.
one-time thing. It's not because of some broad tendency or anything, I don't think. And you know, the
Risk
oil
market's
shock
still
under
on
with
day
Ukraine
lows.
was also a consequence of military action. So I don't know that the world has changed in a way that there'll be more supply shocks, but
Trump's
you know,
going
people
to
have written
fume, says
that paper and
Tom.
that
Monday's
speech
high
a
/
number
weekly
of times.
supply
A
on
number of people have tried to
NQ.
make the case that is the case.
Or a short
And
scout,
In fact, we have
maybe.
seen more supply shocks in the last 5 years than
I
we've
probably
seen
would have
in
wanted to
many
get
years before
short
that.
prior
That's a fact.
to him
Okay.
opening his mouth, but
You said last year that the Fed was reviewing its communication strategies, including the SEP, as part of its framework review. Whatever happened to that? And I have like 5 follow-ups to that, but I guess, what would you change about Fed communications if you had the time? Thanks.
What happened about that was not much, and I'll tell you why. So, you know, we looked carefully at many aspects of the SEP and of our communications, and there weren't any ideas that had very broad support on the committee. And you don't want to make a change to your communications unless you have the committee behind that. So we didn't really make any changes on that. I had hoped that they had some things that I wanted to do, but they didn't attract broad support, and we'd already made all the changes we made to the framework. That was a critical thing. So we didn't. And, I wish we had been able to do some things, but we didn't. So maybe the next chair will take a look. I'm sure he will.
Michael McKee from Bloomberg Television and Radio.
So, Mike.
The minute show in January, some members of the committee wanted to include a two-sided guidance on policy. Was that discussed today? And given the rise in the inflation expectations, how much support for a two-sided policy warning would there be?
So it did come up today. The policy that the possibility rather that our next move might be an increase did come up at the meeting, as it did at the last meeting. The vast majority of participants don't see that as their base case, and of course we don't take things off the table. But you correctly characterized, what was in the minutes that several participants indicated, and something very much like that conversation did happen. What was your second question, though?
I was just one question there, but follow-up would be, there are a lot of goods besides oil that are trapped in the strait right now, and a lot of supply chains getting snarled. How much concern do you have about whether, if this becomes an inflation problem beyond just oil, whether there's anything you can do about it or would do about it, given the efficacies of monetary policy?
You can worry about other commodities. You can worry about all of the ways that oil-related commodities go into manufacturing and that kind of thing. The truth is it's completely out of our hands, and we just, like everybody else, we have to just wait and see what happens. And it'll come down to how long, the current situation lasts, and then what are the effects on prices, and then how do consumers react and that kind of thing. Really, I wouldn't speculate in any way, and there's really not a lot we can do other than kind of watch and see.
Maria Luisa.
Afternoon, Chair Powell. Maria Luisa Capurro with Bloomberg News. I wanted to ask you, you've said longer-term measures of inflation expectations reflect confidence that the Fed will get back to its 2% goal, but there are some colleagues of yours who have pointed to higher dispersion in household service, in business service as well. So, and that they take as a signal that inflation expectations may be less sticky than in the past. I'm wondering if there was a discussion around that at this meeting across the committee.
I should probably move that take profit up just a bit, because I'm not quite sure if we're going to get all the way back down there. The reason for this is simple. The weekly VWAP, it comes in right pretty much where my take profit is, but as you can see, there's a slight tail to the upside right here. If it hadn't already moved down this low earlier today before the news, then I'd be okay with sitting in it. I'm definitely getting the reaction that I wanted to see happen. I'm seeing across the board everything else also getting down there. Dollar almost made a fresh 2-day high. So, I mean, things are looking okay for continuation. But at this point, it's getting late in the session. It's 3 o'clock. So it's kind of one of those things where I might just have to take what I got and then see what happens later. We'll see. I'm gonna let this finish.
Inflation expectations and the risks from higher oil and gas prices.
So at this meeting, I mean, a number of people mentioned and staff briefed on short-term expectations having moved up quite a lot for reasons we understand well. But long-term expectations, you can always find one that's troubling or some aspect of one that's troubling, but ultimately, right through this whole period, the overwhelming majority of the things we look to, including markets, including surveys of the public and also of forecasters, they've all been pretty solid on longer-term inflation expectations being right where they need to be, consistent with 2%. So that continues to be the case. We didn't have a lot of conversation about that. I think everyone does agree that we'll be watching those extremely carefully as we see the effects of the price increases come through from the conflict.
And still on how the discussion went across the committee, before coming to this meeting, there were some members who were discussing the risks of a slowdown in growth and at a time of where inflation remains high. It really doesn't seem that most members are penciling in a slowdown in growth.
No.
But has there been any discussion of the risks of stagflation at this point?
So people actually wrote up their growth forecast by a tenth, and I think that's probably to do with just growing confidence in productivity. But sorry, and your second question was just.
If there have been any discussions about the risk of stagflation scenario.
Yeah, so as I mentioned, there's tension between the two goals, right? The upward risk for inflation and downward risk for employment. So, and that puts us in a different situation. When we use the term stagflation, I always have to point out that was a 1970s term at a time when unemployment was in double figures and inflation was really high and the misery index was super high. Add them together, you get the misery index. And that's not the case right now. We actually have unemployment really close to longer run normal, and we have inflation that's 1 percentage point above that. So calling that stagflation, it's not. I would reserve the term stagflation for a much more serious set of circumstances. That is not the situation we're in. What we have is some tension between the goals, and we're trying to manage our way through it. It's a very difficult situation, but it's nothing like what they faced in the 1970s, and I reserve stagflation for that, the word for that period. Maybe that's just me.
Elizabeth.
When we're looking at the small time frame charts, it definitely looks like it could work. She did get that reaction that you wanted to see and all that, but I mean, if you're looking at the larger time frame charts, like up top there with the 8 hour, it does look like there is some rejection happening, but you're just in a range here. That prior 8 hour candle did not close below support. And since it did not close below support, it does look as if though people are trying to buy it. And then if they're looking at the 4 hour time frame chart, you're still well above the 50 on the RSI. You're still well above the 21 EMA. So in theory, this would be a buyable opportunity, right? If you missed the breakout and if you were thinking that, Farcoin's going to continue the rally, then that would have been your first real buying opportunity. And the reaction that you got from that bounce was a severe bounce. And because of that severe bounce, now people are going to be looking here for potential long opportunities, and we can see that playing out on the very, very small term time frames. I mean, 15-minute looks okay, looks like a rejection. If you're looking at all of this, then obviously you would want to see that roll over for downside continuation. But this was an aggressive rally while everything else was nasty bearish. Bitcoin was nasty bearish, risk, like everything. So, and it's confirmed with volume too. Your volume literally was just pushing. So obviously I would want to see downside pressure continue on the candles as well as deltas here. But that's why my take profit is setting like right here. So if I could get one more downside push and with a little bit of steam on it, that would be able to get me out with a take profit. And I'll be done for the day and looking to see, how things close this afternoon. And that'll basically give me my bias for tomorrow, because this is all kind of a hawkish Fed. I'll get to look at the CEP report and the dot plot and make determinations moving on from there.
Elizabeth Schulze
This
with
guy
ABC
should be
News.
done any minute
President
now.
Trump says that oil prices and overall inflation will go down very rapidly as soon as the war ends. Do you agree with that?
I don't have a forecast on that. I
When
don't
we're
know.
thinking about the impact on American households, as you know, they've been facing these higher prices for years. They've seen an almost $1 increase in gas. How worried are you about households, especially lower income families, being able to afford those price hikes? And should people be bracing for higher costs, including for food now?
We don't know how
Prices
big these effects
always
are gonna
go
be,
up.
and I don't
They have
wanna
always gone up
characterize
since
them in
I've been
any way.
alive.
Of course, people are already seeing gas prices. Gas prices are up almost $1 a
Gas
gallon.
prices fluctuate, but
we hope
I've
that
been
isn't
paying
for a long
$3 a
period of time,
gallon,
and of
give or
course people
take
will feel that,
50
but
cents for the
I don't wanna
last
speculate
25
about what that
years.
might mean, because honestly, that would sound like I have some idea of what's actually going to happen, and I don't think anybody really does. We're going to see how this works out, and I just would leave it at that.
Victoria.
If not longer.
Hi, Victoria Guido with Politico. I just wanted to ask, for purposes of the next meeting, how the Middle East war develops between now and then, how are you thinking about what might guide action at your next meeting? I mean, if we have
That is
oil
the
prices,
stupidest question of the day.
above $100 a
Congratulations, you
barrel
get a cookie.
the entire time until the next meeting, is that going to change your wait and see stance? Like, what would lead you all to move, or are you on hold pretty indefinitely?
We'll have to wait and see. I
mean, how did you think he was going to answer
we
that?
always say we're going to
You
learn
obviously
more by the
didn't
next
think that
meeting,
through.
and usually we do, but in this case, we're going to learn a lot, because we're going to learn 6 weeks to the day till the next meeting, and we're going to see whether what happens is it's going to be very important for the way the economy looks and the way the outlook evolves.
What the
With
stock
happens in the
market's
Middle East, that's
doing.
going to be a big factor, and we'll know that then. I don't know how it's going to affect our thinking. I really don't.
You won't say
And
that, but we all know it.
We did talk about alternative scenarios a little bit, but it's just, I wouldn't bring that in here. It's very uncertain, and
gonna
I just
print-
want to just remember that we
You're gonna
don't
print
know.
so
and
much
we
money.
shouldn't assume it's going to be one thing or another. We're going to see.
So is it a matter of you don't know how the situation itself is going to evolve, or even if things remain as they are, the economy could still remain relatively durable in face of them?
Yeah, that's true too. No, I mean, the U.S. economy has just, made it's been strong through a whole bunch of challenges. I mean, if you go back to 2023, when we raised rates a lot in 22 and 23, and close to 100% of
Record
economists called for
speeds.
a recession, which didn't happen. In fact, 2023 was a really strong year. So the U.S. economy has really been just doing pretty well through a lot of significant challenges over the past few years. It's been amazing to see.
USA,
And
USA,
I
USA.
don't know what's going to happen in the next intermeeting cycle, and I don't know what's going to happen in the Middle East. I wouldn't want to speculate.
Well, basically, I'll
Hi, Jeff.
speculate.
Thanks for
I know what's
taking
going to
our
happen in the
question.
Middle East. Basically, we're just going to spend a lot of money dropping bombs on stupid little rocket launchers, and this is going to last for, say 5 or 6 years. The missiles are going to stop. The drones are going to stop. We're going to start sending boats through, and then you're going to have dudes running all over town, because there's only, a 25-mile radius where they can literally target the Strait of Hormuz, 100-mile wide. That's a big chunk of land to monitor. You're going to have to run jets 24/7, night and day. I mean, it's just going to get stupidly expensive. And Iran's going to allow their boats and China boats to go through and India boats to go through. But any boats that are going to the West are going to get hit with cheap drones. And it's going to go on for a long time.
What makes you so certain that tariff-related price increases will be a
That's why the
one-time
dollar's
effect?
up.
I don't think we've seen you since the Supreme Court tariff decision, and it's pretty
cuts
clear
are getting priced
that none
out
of us know what the extent of the
thanks
tariff
to
shock
the
will be as
10-year
the
and
administration
the
moves
20-year.
to replace some of the
20-year
tariffs
had
that
a
were
nice rally,
overturned.
right back down
So
again.
I suppose I'm curious, what
That's
would
gonna be
make you
because of the
question
dollar.
this certainty that tariffs are going to be a one-time price effect?
Well, I would not at all use the word
Donald
certain
Trump
about
backed off
my
his
views on
dollar
it.
bear rhetoric, and that's literally what put the kibosh on the dollar bears. Donald Trump was loving the dollar move. The dollar was loving Donald Trump, loving that move. And then all of a sudden, someone's obviously spoke to him because he backed completely up off that rhetoric. And since then, the dollar has basically rallied.
That I'm not certain. I'm uncertain. But just if you think about what it is, it's a one-time increase in the price of a good, right? And what inflation is ongoing increases in prices this year, next year, the year after. That's what inflation is. It's not a one-time price increase. There's a very, very big difference. The public doesn't really focus on that, but that's the difference. And tariffs should be in theory, unless they cause people to start expecting still more tariffs the next year and still more tariffs the next year, they should be a classic one-time thing. People say the same thing traditionally about an energy price spike, because traditionally prices go up and they come back down. And by the time monetary policy would react, you would it would be over. So I don't have tons of confidence on that. I think that the theory is probably right, but as usual, the time it takes to get all the way through the economy is just very uncertain. And we found that coming out of COVID, that the inflation did go away, and largely for the reasons we thought it would, but it took 2 years longer than we thought.
Video did break down here,
so
and it
I
closed
think we have to be
under.
humble about knowing how long it will take for
So
tariffs to go all the way through the economy. And
It is
so
what it
what
is.
we've been doing is
I got
our
stopped
staff's
out of
been
that
doing-
short, and it
very
really
interesting.
drives me crazy. There really was no. I mean, there was some news, but that was that's a 1 5-minute candle that did that, and then it got faded. So that run was literally just to stop me out. I was short here, so it's very difficult for me to put a short on down here. Yeah, so it sucks that it's now breaking down. There is a gap here, but it's a pre-market gap up. If this low stays intact, I won't short it. I mean, I'm not going to be able to short a breakdown either, so I'm just going to have to wait for a spike, a multi-day run to the upside before I can get short NVIDIA again. I do still have the put on NVIDIA, but I'm not loving it.
Started off with just an estimate because
S&P's
there wasn't
almost
a real
backed up,
history, and then they've built
unchanged
based on
on
the
the
history
week.
that they're seeing of tariffs coming through into prices. They can now have an arc, and for all the tariffs they can say, well, so we have, I think, a slightly more confidence that we will see tariff inflation coming down, not prices, but you won't see further increases, and we should start seeing that more and more in the middle parts of the year. We do expect that. Now, you're also right, though, that the level of tariffs came down fairly meaningfully in the wake of the court decision. But the administration said they're going to get that rate right back up to where it was. So, and we assume that they'll do that over time. So that's
I know
how we think
private
about it.
credit is suffering a little bit. It's a lot. It's not suffering a little bit, but I mean, at what point do they start talking about a bailout? I mean, the U.S. hasn't let anything really go under in so long. I mean, printing billions of dollars would be good for crypto, or it has been in the past.
Hi,
they're getting
thank you.
close to the end
Chris
of this
Rugaber at Associated Press. You talked about the shortcomings of the SCP in this environment. I wanted to ask about, or throw in an additional thing, which is the fact that it's happening before transition. Is there still some value, perhaps, in the public knowing what other Fed officials are thinking, the ones who will stay on for the rest of the year and beyond? And does that even handicap your successor in any way? Well, just in terms of having a whole committee expressing its views, is that something that locks them in for the rest of the year.
No. We never. The SEP is never. People are more than happy to change their SEP dots. They're no way bound by them. You know, it's your opinion at a moment in time, which can change based on events. You know, sometimes very quickly. So it never locks people in. You know, people are more than happy to be proven wrong in either
feels to
direction.
me like
And
there's just
so
not much
I just think
volume
we do
here.
it. And you know, I mentioned this was a time when it's very hard to do it. During the pandemic, we actually took one
Low
meeting off, I
volume
think.
spike.
But you know, we don't like to do that just because it's hard to do. We should just keep doing it. But I just would say for this one though, I think it's even more than usual good to
Even
take
Bitcoin hasn't gone anywhere since the speech. It hasn't done anything. It hasn't made a new low. It hasn't made a new high. It's just sideways, and that's probably what we're seeing on Parkland.
So you mentioned at the beginning of this conversation that you're well aware of the history of inflation running above target. It seems like that might be what's underpinning the affordability problem that we're hearing a lot about on Main Street.
S&P just made fresh lows. Dollars
that's
trying to
impacting the
make that fresh
psychology of the
high.
consumer, especially given that they're a big driver of overall
But
economic
they don't
activity.
seem to be affecting Parkland at all. 100, 115.
That's all about. But I'll tell you what I
is the
think and what
high.
we see in surveys, and that is, you know,
And dollars gotta
people's-
move
there were
up
big price increases.
just slightly to take out
all
that
around
high.
the world, by the way, everywhere in countries like the United States had basically the same kind of thing. It was a global inflation coming out of the pandemic, and everywhere people are feeling like real wages have been going up in the United States now for 3
It got
years,
pretty
roughly.
close to hitting the take
But people are
profit,
not
but
feeling they're not feeling good about it yet, and it will take some years of positive real earning gains for people
I was
to
kind
feel
of hoping
good
it would
again,
get
we
there
think.
before the stream
But
was
you're right.
over.
But when you talk to people, they do feel squeezed, and you know there are areas where prices are still going up, like insurance. Various different kinds of insurance are getting more and more expensive, and that's just catching up really from inflationary pressures that take a while to get to into the price. So we take it very seriously. We don't dismiss it at all. It's a very real thing from the standpoint of what people are experiencing, and you know what it does for us is, you know, makes us even more committed, if that's possible, to getting inflation back to 2% on a sustained basis.
How does the Fed's independence play into the ability to address affordability?
Well, independence is what allows us to do our jobs, and you know, stable prices is half of our mandate. It's one of our two mandates, maximum employment being the other. I mean, look at every advanced economy that looks anything like the United States, anywhere in the world, in a market economy, in a democracy, and you'll see, you know, pretty much central bank independence that looks a lot like, in some cases, stronger than what we have. But it's critical that we have that so that we can do the things when we need to do them to preserve price stability.
Inflate your money away.
It's an
We
accepted
must be
standard
able to
practice, I
inflate
think,
your
has
money away.
a lot of support, certainly in Congress, which is where our oversight is in Congress. And you see that among Democrats and Republicans in the House and the Senate.
Hi, Chair Powell. Richard Escobedo at CBS News. Thanks for doing this. Two questions. One, how high would oil prices and broader inflation have to go, and for how long, for the committee to consider hiking rates? And then secondly, diesel prices are rising faster than gas prices. How concerned are you that the increase in diesel might drive up food and goods prices and lead to broader inflation?
Yeah, I'm not going to give you an example or a specific answer on the first question. You know, we're prepared to do what needs to be done, but I wouldn't want to hypothesize about what that might be. You know, in terms of diesel prices.
No kidding.
So your
That's
question
another
there
dumb
is, are we
question,
concerned
but-
about it? I mean,
How concerned, and whether or not it will drive up, you know, the cost of food and other goods that really rely on it to
So
move
I think
across the country?
It's not going to
more
do it
general
that much.
concern than that. It's
I mean,
diesel
obviously,
prices
if
because
diesel goes up
that's transportation
insane.
of food and things like that. There are just lots of ways that oil and derivatives of oil get into the production and transportation of many things. So, and those, there are big effects in headline inflation, but things like that leak into core as well. And the effects may not be as big, but they're quite real and they're material. So we are aware of that and we're watching it, but you know, we're right at the beginning of this, and we don't know how big you just don't know how big this will be and how long it lasts. It may or may not be something that really makes a big imprint on the U.S. economy. We're just going to have to wait and see.
Yeah, hopefully, but they're not going to be able to stop them. Doesn't matter. You can decimate the whole military. It doesn't matter.
I was looking at
It'll
the
be
longer run
random
bits of
people
the
doing it.
SEP. I noticed that the growth estimate had been revised up a good chunk from 1.8
It's a
to 2, and the kind of
dumb
long-term
thing to
Fed
be
funds
over
rate as
there.
well. It'd be great just to hear, is that AI productivity or what's going on there exactly?
Yeah, I think it's just productivity. We actually started seeing meaningfully higher productivity some years ago, 4 years ago, 5 years ago, and that's not because of generative AI.
Oil explode this summer, says Matty Ghost. Recession is around the corner. Well, I got news for you. It's going to require 2 negative quarters of GDP.
Somehow become more
So
productive.
you're at
because there
least
was
6 months
an
out.
incredible labor shortage.
You're always going to be on the back of
and
6 months out.
I think
Until you
economic
get that
forecasters are
first
very
negative
skeptical
print, then
of
you could be a quarter out, but you're always going to be
periods
6
of
months
high
out.
productivity because they're so rare, and they're often revised away. And for many of us, I never thought I'd see this many years of really high productivity, and by the way, expect it to continue.
There's not a whole
And we
lot
haven't
of
really
stuff out there. He's going to be done right after this, and that question had no meat on it anyway, so I'm going to stop him right there. Yeah, you're always going to be 6 months out on a GDP prints, unless the MVER changes around what metrics they need for them to come out and classify a recession. You're always in a recession long before they come out and say that you're in a recession, but we track the same data points that they track. So we know what they're looking for to be able to classify a recession. So to make that statement, it's kind of, you're nowhere near what you would need to be at to be able to say a recession's around the corner. You're every bit of a year and a half away from a recession, and that's if every number starts trending down now. At best, oil is going to cause problems with inflation because we know oil prices affect CPI, right? So yeah, obviously that's going to cause an issue, but there are many other data prints that you're going to have to keep an eye on before you can say there's a recession coming. The market is definitely not liking, the S&P 500 is definitely not liking what they heard today, because you are stretching out here for your secondary leg lower. Generally, the market looks like this or sideways. Now you're actually seeing range expansion today. So it does look like it's trying to get back down there to fill that gap. Daily support's coming in at about 66.30. And dollar did make that fresh 2-day high. Right here is that high. You just got above it just now. So the dollar's uptrend is moving in the right direction. So on Aussie dollar, it did back way up off those lows when we first started the stream. Backed way up off the lows. Now we are back down at the lows. So good stuff there. This is finally working in the right direction. We love the Aussie dollar short for dollar strength. And if gold and silver were both affected by dollar strength, then Aussie dollar was our favorite Forex short for this week. Obviously, at the beginning of the week, it came out swinging. It came out hot and heavy, but now we're starting to see those Aussie dollar shorts show up. Now we'll just see if we get any downside continuation out of this or not. Daily 21 is here. You're tagging the 50 now. You already do have a bearish engulfing, and just depending on how this thing closes today will determine whether or not if you close under yesterday's low or not. That will be a good signal, I think, going on for the rest of the week. And then obviously Bitcoin has shifted its near-term weekly trend. Was up, obviously, Monday. Let's go out to the daily here. Tuesday was the pullback. And we were watching the weekly low this morning to see if we could find a bounce there. It could not. Doesn't mean it won't find a bounce down here around the 21 exponential and the monthly VWAP. But obviously, if you're looking for shorts on Bitcoin, the week open is most likely going to be a very good target to keep an eye on if you get a pullback up into this Thursday, Friday, right? But the weekly range is pretty much set at this point. That was your low, and you have been making consistent fresh lows today. And the short on Fartcoin just isn't going anywhere. It's headed in the right direction. There's just no momentum whatsoever to speak of. We'll give it a few more minutes here. See if it can trigger our take profit. Our take profit is setting right at about 1996. It's 1993 on the week's platform. But I'm probably going to move it up slightly. Where I have it right now would be a $300 win, which is typically what I aim for on small risk. Very small position, very small risk. Not bad. And like I said, I've already made money on a ZEC short today. That trade was pretty much flawless, as by the time I closed it, we had already gotten many candles of downside continuation. It was an absolute fantastic short. The silver and gold shorts both working out pretty good. Gold actually having a better move lower than silver, as gold has already got down to that February 17 low, which is a lower low. So finally you have made that lower low on gold. But on silver, you have not done that yet, as this is that February 17 low. Wait, sorry, down here is that Feb 17 low. So this was my longer term short target on silver. I was anticipating we get it. As you can see here, we are currently trending under last week's low and that week's low, which is what we wanted to see this week. We wanted to see a downside continuation move, and we were targeting down here. So it does look like it's going to hit it, and I'm going to miss this last portion of it, but it is what it is. I will be looking to put new shorts on if it does bounce back up into the week open. I don't know that it will, so we'll have to see what happens there. Okay, Fartcoin is starting to give us a little bit of a push here now. Let's see if it can get down to our take profit. See if we can get filled on that. And then for dinner, what are you guys thinking? Mussels and white wine with some nice garlic French bread points. That sounds yummy. Sounds yummy. I think that's what we'll do for dinner. As today will be in the books. Little scare this morning earlier, as I stated earlier in the stream. If you are trading on weeks, there was a little bit of a scare where we were unable to get out of a Bitcoin position. But we know now, in hindsight, that it turned out to be okay. Nobody in the Discord has said they suffered any massive losses or anything like that. So things seem to be just fine. On that front. See if Bitcoin's pushing on the lows. Not quite yet. Maybe Ethereum is. Nope. Ethereum's still up off the lows. NDX did get up there, did get down there, fill the gap. Oil broke out of what was a nice little downtrend this week. This broke out on news. This morning. Something got bombed in Iran that caused oil to spike. It was a gas. If I'm not mistaken, I believe it was a natural gas. It had a station, like a natty gas station. It wasn't oil, but that still obviously is going to affect the price of oil here. It still looks okay to hold as resistance. You're still down on the week. Although depending on how this candle closes will dictate what it looks like. As you're well above the midpoint of the weekly range at this point. So it's not looking great. But it's not looking terrible just yet either. You can see once you got up there above yesterday's high, that's kind of where you started to back off a little bit. So if there are sellers in oil, that would have been a good place to look. As you can see, once you got up there, boom, that would have been about the time to put the short on. But now that we've gotten the Fed, the FOMC data, and the press conference, oil has moved back to the upside. So a little bit of chop and slop happening around the weekly VWAP. So just because we did spike back above the VWAP here, I do not have a bullish bias on oil just yet. So now I've got to give this thing time. It's a large box, so I got to give it time. I would rather see it build in, resistance here. As long as it doesn't break out to the upside here, I can look for that bearish bias and look for it to come back down and then trend back under this. So if we break out on oil above 98.46, we will no longer have a bearish bias on it, as at that point in time you will have retested this as support and it held and then you broke out. You see what I'm saying? So this would be the real move. This would be the support test. Price gets validated as that support test and breaks out. And we don't want to be a seller then. And oil is still extremely volatile here, so it is going to be a difficult trade to get positioned on it for a longer term play. I honestly think that if they get the Strait of Hormuz under control, or at least work out some kind of deal where they allow boats to start freely flowing again, it could still be a month after that, or a month or two. It could be longer than that. We don't know how much damage is going to be done here to the petrodollar and that whole system. But obviously that is what has the dollar flying here, and it's going to be oil. So I do like dollar higher. I think if it breaks out above Q4 2025's high, it could potentially run much higher. But it is fighting with a little bit of resistance here, being the $100 big figure number. As you can see, you're currently above it right now, but not by a whole lot, right? Not by a trending margin. So yeah, looking like we're going to see dollar strength. And as long as you have dollar strength, I think the best trade to put on crypto would be downside positions, which is why I was looking for shorts on Zcash today. Fartcoin this morning, we were watching it this morning. We weren't able to put on a position because that oil news came in early, around 7 a.m. And then Fartcoin fell out of bed then. But I'm glad I wasn't able to put that trade on earlier this morning, because it came all the way back this evening and then gave us that entry opportunity. So I'm just going to take profits if it does break down here, but I will leave that trade open for downside continuation, because if you look at what Fartcoin has done here, it was a nice move on Monday. Very nice rally. So if Bitcoin is going to head back to the bottom side of the range, Fartcoin would be one of those that gave you a nice rally to sell into. Checking out the EMAs here, your 200 is still way up here, so it is still extremely oversold in terms of the 200 EMA. In terms of the RSI, yeah, I mean, it looks like it's structured back to the bullish side here. So I believe if Bitcoin does pull back and test that 21, Fartcoin could be back down there in a couple days. So my short up here looks like it is positioned nicely for a run lower. But I would love to be able to get profits out of this before the stream ends. We are seeing more Southside Delta show back up here, so that's nice. And you're starting to see it break and trend. So I think that would be required for price to roll over and head under the VWAP here. Could be support. That's why I need to get that take profit pushed up just a little bit. But in order to do that, I'm going to have to do the VWAP. Let me see here. If I can get that anchored VWAP up here on weeks. See if it's in the same place or not. Let's see. 1 second. Let me get you up there. Thank you, my love. So let's kill the moving averages. Oh, I gotta turn this stuff off. I don't use the bands. I just want the average. And since it's intro week, I want it green. So my take profit is kind of setting above it here on weeks. It's at 1994 on trading view, and then it's at 1981 on week. So I need to get this up above 1994. That will affect the take profit slightly. So it won't be a complete and total $300 win, but it would be close. It's just having difficulty moving. Okay, so on the 5-minute chart, it's not even there. Wait. Okay, so I'm looking at the 15-minute chart. That's so weird. Why does this move? It shouldn't move based on the time frame. So I am above the 15-minute because I'm looking at the 15-minute down here as well. And I'm looking at it at 1994. And then up here on a 15-minute chart, is this set to New York? Yeah. Oh, yeah, I'm not sure what's going on there. Not quite sure what's going on there. Why that shouldn't be different based on time frame. But volume sometimes is different on depending on time frame. I just don't understand it. Doesn't make any sense. Why is this down here? It's better. So I don't necessarily need that RSI, not on the 15-minute chart. Where does it put my big profit on this 4-hour candle? Above support. So that's good. That's what we want. Above support. So if this tests the open and finds support, we would definitely want to get out. So in a sense, all we've done here to simplify it for you guys is this was a pretty good sized down move and it made a lower low. The high of that candle was a lower high. So lower high than this high, right? That's a lower high. And then there's the low. This was a much lower low. And it closed under. So when this pulls back up into this candle's range, as long as it stays under the previous high and stays as a lower high, we can sell here and take profits just shy of the open. Because we know the open could act as near-term support. And that open is literally right there. This doji candle, that is your open. In 1988. Oh, sorry. We just need that lower low. And we can get filled on that. We can bounce. Private credit market. Yep, read that. Tariffs aren't good. Yep. Oil will explode this summer. Recession around the corner. Hi all. What's up, Bo or Bear? Nope. Shorting altcoins like Resolve, Lin, and Sign. I'm shorting Siren soon. We can go look at Siren. I have no problem looking at other alts for trades. If there's a trade on it, I'll take it. You know what I mean? Siren. I don't know what the ticker is, so I'm just going to type Siren USD. I don't know if this is the asset you're talking about. This thing is on absolute fire right now. Yeah, I wouldn't short this just yet. It's 93 on the RSI, on the weekly time frame, so it is probably getting close to being done. Unfortunately, it's in the midst of a short squeeze right now, and your weekly high is today's high. So it makes it a little bit difficult to look for that weekly RSI to cool down. Obviously, it's getting close to the top, right? So I agree with you that this will be a good short. Will it be an easy short to catch? Probably not, because there's a lot of very near-term volatility here. I mean, a lot of big near-term volatility is the proper way to say that. I mean, just look at this, like, insanity. Yeah, it looks like it's building up for another spike. So we do know that this goose is cooked. Since you're at 91 cents, I would probably watch a buck. Watch $1, because that's going to be a big figure number. And I imagine if it gets up there, a lot of these guys that got in today and yesterday and the day before would probably take profits up there, as if you got in down here, which was Monday, you're at a 100% move. I mean, how greedy can you get? You know what I mean? Crypto markets can get real greedy. That's a joke. They can get and stay real greedy for a long time. We're about to get filled on this trade. If we can get just a couple more ticks lower, just a couple more ticks lower, we'll get filled. We'll make our $300, our 100%, and we'll be done. But yeah, I'm going to keep that on watch. Thanks for telling me about it, because a 93 RSI on the weekly, it's definitely something I want to keep on watch. Eventually, it is going to run out of steam. Might eat a stop or two. Let me see something here. Why isn't it good? Oh. Here's the perps. Let's look at the perps. Let's make sure we got the same readings. We do. 93.80 there. Want to look at the session volume profile. Big volumes coming in here. I think you're early. If you're already short, you're probably most likely going to take out that swing high. I don't know if you'll get all the way up to $1, but it is the level that I would be interested in watching to see if it could fail. Let me set this as $1 real quick. All right, good to go. So you might eat a stop or two getting in on it, but yeah, it's definitely a good one to look for it to eventually run out of steam. That was a gigantic move after a big bearish move. So imagine if you would have been watching this prior high right here and you got short after it fell back down. Oh crap, let me see here. Let me get it over here. Not quite a 50% drop, but almost in one day. That was a 30%. This thing is moving, dude. It is super volatile. This one's going to be hard to catch, but it is definitely one to watch. It will eventually run out of steam. So, of course, Sparkcoin rallied on the near term, so I didn't get out yet. But Siren, I need to put this on watch. For sure. Look at River today. River's up 16%. River was phenomenal, man. What a massive rally. I don't see the level that we bought it at. But I'm no longer in it, but it was down here, wasn't it? It was right there. No, where was it? Where was it? It was in here, I think. The thing's all the way up to 26 bucks. That's a multi-100% rally. Absolute insanity. This is why crypto is still loved to this day. Yeah, and Siren's up 24%. I wouldn't be trying to short it today. Unfortunately, if it rolls over, you're just going to miss a big chunk of it because you're going to get chopped up if you try to short it right now. It's up 24%. The sellers have been trying to sell it literally since 7 o'clock this morning. They've been short praying for it to break down, and it hasn't yet. And each one of these swing lows are getting higher and higher and higher. Eventually, it's going to spike. I mean, that's the way it looks, right? Anything is possible. It could just puke, but it seems like it's waiting on something. What's it waiting on? What is this waiting on? But yeah, definitely, this is a good one. What are the other ones you said? You're in Resolve. Nope, shorting altcoins like Resolve, Linen, Sign. So you're already short those, and you're looking to short Resolve soon. Let me go pull up Sign. This one's already starting to make its move lower. LYN, USDT. I want the perps. Oh, this has already been murked. Yeah, I'm not interested in that. It's already, like, there isn't much juice left. I wouldn't doubt it if this thing doesn't rally soon, as that's a fresh all-time low. Resolve. But you're already short these, so you're in good shape. Obviously, I put the E on there. So maybe I need to get rid of the E. Yeah, this one is also on the lows. Yeah. So I'm like you. I like Siren just because it is massively overbought on the weekly time frame. I mean, it's more overbought on the weekly time frame than XMR got almost. And Zcash. I don't quite remember what they achieved, but it had been oversold, overbought like that for a long time. But once you get above 90, I mean, it is getting close. So it might be early today. Maybe tomorrow we'll take a look at it, see what we get out of it. Hopefully we don't miss it. But if we do, it'll be fine. All right, I'm just gonna bounce on Farcoin. I'm obviously not going to make the full $300, but I think at this point I'm just being a little bit too picky. So I'll take my $250 and call it a day. $237. We're out. $237 of profit. So we're good to go there. Let me adjust this stop loss where it's not quite $10 if it goes back up, but I'll leave it on. And then if it shows me some larger time frame resistance moving on, like tomorrow or the next day, I'll look to add to catch more of a downside move. But yeah, I mean, I could be waiting for that last little bit for like 2 more hours, and I'm not into that. Got in, made a little bit more money, so account's looking good. We're doing it. We're doing it good. Also, the funding rate on Fartcoin is paying sellers, so there's no point in closing a short. If you took the short with me, there's no point in closing it. Absolutely not. It's free money as long as it stays paying the sellers. So we'll take that as well. All right, any other questions? Is it because your TV chart is set to Binance and not weeks? It could be that. And he's referring to the VWAP here on this other chart right here. It could be that. It could absolutely be that. Volumes are going to be different across exchanges. So, yeah. Thanks for top-notch commentary. You're welcome, guys. Hey, we'll see you tomorrow morning. Tomorrow's Thursday. We'll do another public live stream tomorrow. We do the public live streams every Tuesday and Thursday, and then anytime we do anytime we get NFE or FOMC, if there's going to be news. We knew that they weren't going to cut or hike today, but I did want to hear what he had to say, and I did want to get those dot plot projections. I'm going to tear through those here in a little while and see what we got there. And yeah, pretty much chill for the rest of the day. Thank you guys so much for being here. Make sure you guys trade safe. Make sure you trade smart. And as always, happy trading, everybody.